3, 2, 1.
Here we go!
Hey there, welcome back to the channel. If you're new here, my name is Nate Gritzmacher, aka Nate Lens, and in this channel, I cover all things mortgage and real estate, whether it's your first, second, 50th, 100th home, where you're trying to determine between rate and term refinancing, cash out refinancing, what to do with the equity in your home. This place is for you. I hope that you ultimately are well informed from viewing my content, and you just feel so much more confident when you're trying to decide on what the next move is for you. So with that being said, in this video, we are going to be going over rate buydowns and not temporary buydowns. I did a video on that previously. If you want to watch it, here's the link. But long story short, the temporary rate buydown strategy is smoke and mirrors. There's no financial benefit to you as the borrower. So my recommendation is to not go with it. But if you want to find out why, click that link and go watch that video. In this video, we are going to be talking about permanent rate buydowns because in a lot of cases, permanent rate buydowns can make sense. For this, it's all going to come down to just how risky you are, some gut feelings, and just some speculation on where the market's going to go, and some math on where the break-even point for the cost of that rate buydown is. So let's jump right into some of the things that you need to consider when deciding if you want a permanent rate buydown or not. The first one being break-even points. And simply put, a break-even point is just when you'll be recouping the money that you spent to buy down that rate. So all you're doing is taking the cost of that rate and dividing it by the monthly savings to get the number of months or years it's going to take to get that money back. So let's look at a really quick breakdown of a few different options. So let's just say you're getting a $480,000 loan on your purchase at a term of 30 years, and the par rate for that day, excuse me, is 7%. Now, your principal and interest payment on that is going to be $3,193.45. And in this case, there's no cost for that rate. You're actually going to get a lender credit, which can be found in Section J on page 2 of your loan estimate. You're going to get a credit of $677 back towards your closing costs. Now, let's look at two buydown options. So in one case, we've got 6.5%, and we've got a principal and interest payment now of $3,033.93. And if we go to page 2, section A of your loan estimate on that, we can see that it has discount points in the amount of $6,643. Now, the monthly savings on that is now going to be $159.52 versus the 7% rate option. And your break even on that is going to be 41 months or almost 3.5 years. Now, if we look at the 6% rate option, your principal and interest on that would be $2,877.84. If we go to page 2 on your loan estimate, again, looking at section A, we've got discount points in the amount of $15,384, and the monthly savings on that, as opposed to the 7% option, is now $315.61. And now we take the cost for the 6% rate, divide it by the monthly savings, and we get that break even in months again, almost 49 months and just over 4 years to recoup that. So now that we have some numbers to work with, some break-even points, some costs associated with some buydowns, now we get to point number 2 on what to consider for these buydown options, and that is speculation and timing. For some context on this video, it is 11/14/2024, and rates are quite high and generally are expected to decrease over the next 2 to 3 years. And if your risk tolerance is high, then maybe you don't do the permanent rate buydown option today because those break-even points are 3.5 to 4 years out, which means that you're not going to recoup that money in time if you were to refinance out of that first mortgage. So if you're looking to purchase a home or you're in the middle of purchasing, I hope that this helps clarify how you need to look at permanent rate buydowns to determine whether or not it is worth it for you. If you found this video helpful, please like and subscribe. Leave a comment below if you have any questions at all or you want to see specific content covered, and we will try and get that uploaded as soon as we can. Thank you, and I will see you in the next video.